Now in this video we're going to be discussing the TSC. So we've turned this on. The TSC is not an indicator that we created. The TSC is essentially TradeStation's Arun indicator. So if you go over to Studies and you go up to Arun, okay, right there, or the oscillator, this is exactly the same thing. All we've done is added some color to it. Okay, now we use 25 as the default. You can manipulate it, but I don't recommend it. Now what's cool about this indicator is the fact that it very effectively displays divergence. Now first of all about the indicator itself. We have three colors. Whenever there has been a downward hook, it displays the color red. If it's an up hook, it will go to green. But when it hits its maximum range, which is 96, we make it change color to yellow so that you know you've hit the maximum range. Now here's the thing. It has to hit 96, but it has to move to the next bar before it's going to display yellow. So when oftentimes what happens, like it right in here, it will display that it hit 96 in retrospect, but it'll take it down to where the bar was previous to that. Okay, so that's kind of obvious. Let's move that back here. Okay, so it hits 96. If it stays there for one bar, then it'll be flattened out. Okay, but it will also display it back to the previous bar at whatever value the TSC was at the time. Now, what we really like about this is that it enables you to see divergence very clearly. And a typical example of this, let's just I'm going to squeeze this together a bit. All right, so as the market, we'll look at the highs here. We'll just pick this high because it's obvious. You see how much lower the TSC is at this high? When you're watching the market move and you see the TSC maxes out, it maxes out. Generally speaking, you don't want to take a trade when it does that. You want to wait until the market goes higher, but the TSC is lower, like right there. Now it moves higher again here, and the TSC is lower once more. Again, there's divergence there. Now, there's also divergence right in here, because once again, you're at a higher high on the ES, a lower high on the TSC. We pay no attention to the fact that this high is higher than the previous high. It's still divergent relative to its maximum range. So I would look at my other indicators, but I would consider taking a trade here as well as here, and certainly there. Again, over here, it's very obviously divergent right there. Now, there's a problem with the TSC, which is why we have other indicators. But as you see it max out and then go into a lower high and a higher high on the SPOOs, it's a perfect opportunity to take a trade. The same idea applies to the lows, but you're not generally going to see this happen when, in other words, the lows, the maximum low range will typically not take place when you're in an uptrend. So you notice all throughout here, we never hit the maximum low. It only happened after the trend changed. Here, it hit the maximum low, and then again in here. But over here, it hit its maximum low and then became divergent. So let's look at that more closely. Okay, you hit the low in here. It became divergent right there. Lower low, higher low here. Clearly divergent, good time to enter the trade. Here, it's a little bit confusing, okay? You do get it, but it's not very stable. So let's look at that low. All right, you hit your maximum low here. Then you hit a higher low here. And the market moved up from a low of 1850 to a high of 24. So, that's a 6-point move. So there was divergence there. Here it hit it again. There's the low. And then it moved up and continued up, but it was divergent at that low right in here. This is a higher low on the TSC. Again, now the market moves up. We're not likely going to take that trade. It's maxed out, but it's not divergent. The market drops, but comes back up into a higher high, but a lower high right in here. Now the trend is continuing up, but that could be an opportunity. I mean, that's what it looks like. You're at a higher high here. You should be at a higher high on the TSC, but you're not. So you've got divergence there. We're going to talk about the problem with the TSC in just a minute. Now it keeps on going higher and higher and higher and keeps on hitting its maximum high. So that's one problem. It isn't always divergent. Here's another lower high on the TSC, right at the low of the ES. But over here, it hits its high. It becomes divergent at the next move up. You're at a lower high here, but it doesn't display as easily. It's not as easily seen as it is like in here. So you just have to be aware that it's at a lower high, even though the market's at a higher high. The TSC is a lower high. So you want to look at that very carefully about taking a short trade there. Now, let me describe the biggest problem with the TSC. Let's look at let's look at this example in here. You hit your maximum high here. So you're anticipating that if the market is going to go higher and will short, it's going to have to go higher than this price in here. So I'm going to draw a horizontal line at that price. So when we hit that price and we go higher, well, the TSC is divergent at that higher price. It's divergent at the next higher price. It's still lower than it was. And you don't know that it's going to pivot. It's not going to hook yet. You don't know that. So this is continuing to move up. You don't know where it's going to hook. So that's the flaw. It's easy to see in hindsight, but it can't be anticipated in real time. So keep that in mind. That's the problem with the TSC. So to avoid getting into the trade prematurely, that's why we add additional indicators. But get used to identifying that pattern. It's very, very effective to look for this divergent pattern on the TSC. Learn how to identify it. It's simple to do. It's very, very simple to do. Just pick any old time frame that you want. And where's the divergence? Right there. Easy to see. It was, you hit the low here, you went lower over here, you waited for the market to come down. And again, as it the same idea that I just described, you got that problem here too, but it's just easy to see. Okay, here we are. Okay, all right. You're lower than you were here, and you are divergent on the indicator because, you are divergent because you're at a higher low, but you don't know that it's going to continue to move down. You don't know that until after the fact that it's hooked. And sometimes it doesn't hook immediately. Like over here, it's already hooked, or when it does hook, the market's already pivoted quite a bit. So again, that's why we use another indicator. So let's take a look at that next indicator now. And that indicator we're going to first look at in conjunction with this is going to be the RSX. Now we've got several different RSX on the chart. I'm going to use, first of all, the one that is set to 10 and 0.1, all right? Now, this indicator also has a range to it, as you can see. And with this particular setting, it'll go just above 90. So if you wanted to manipulate the upper and lower band, all you have to do is just change it. Okay. All right. Now let me repeat that. You see that it's already set to 90, and there's a second band at 60. The band at 60 is being displayed. To display the upper band, you need to go in here to Style. All right. This has been moved over to Clear, but if you move that, slide that bar to Solid, then it will display as well. Okay. So that's the maximum range of this indicator, is just above 90. Doesn't go any higher. Pardon me. I mean, it does go higher than 90. The maximum range, I should have said, is 100 on this particular setting. And when it hooks is when it changes color. So when it is above the 0 line, the color of this is cyan, above positive slope above 0, magenta, negative slope above 0. But when it drops below 0, it changes color to red on a downslope and green on an upslope. Okay, that's the meaning of the colors. But all that we're interested in is when it hits its maximum range and then becomes divergent. So let's just look at this situation right in here. We hit the maximum range here, and we were looking at this high. We're at a higher high here. We're at a lower high here. Okay. So how do you know that this is going to turn? Because the RSX has reached its maximum there. It is now going to turn. So now just visually, you see a reason to go ahead and take this trade. This is turning, so you're good for shorting that trade. Over here at this high, again, you've maxed out here, you're divergent here, all right? Now, where are you at here? You're way below, and it's turning. So you've got plenty of divergence here, and you could successfully take a couple of ticks off of that trade. Here, it's even more divergent on the TSC, and it's immediately hooking. So there's another good opportunity. Here, it's even higher. Again, it's divergent here. You're way low here, and the RSX is turning. So that's safe to do. Now, there are other opportunities, of course, where you're going to see divergence on the RSX and a divergence on the TSC. So you can just learn how to read that and make your determination whether or not you want to take the trade. Here's a couple of instances where we maxed out and we were divergent here. So sometimes I will do that. I'm not getting divergence here, but I'm clearly divergent on the RSX. So you can take that. Here again, maxed out here, clearly divergent here, you can take that. Okay, over here, you're at a low. Now you're divergent on the RSX as well as on the TSC. Very clear divergence here. Higher low, lower low here. Good opportunity to take that. It moves up. You never max out, but you can see that the RSX is divergent. You get a lower high here compared to here, at a higher high here. So in spite of the fact that this hasn't maxed out, this is divergent. You can take that. All right? It's a very easy indicator to read. Now, the settings of this indicator allow it to be, we can